Hello and welcome to the Money and Banking Law Podcast with Joe Silvia, brought to you by Duane Morris, an international law firm with roughly 30 offices and 1,000 lawyers all over the world. I'm your host, Joe Silvia. I'm a former Federal Reserve lawyer who represents banks, fintechs, and financial services clients on M&A, payments, and regulatory matters at Duane Morris. I'm also a core member of our banking, fintech, and digital assets and blockchain practices. Now, while we can't provide legal, financial, investment, or tax advice on the podcast, our goal for the Money and Banking Law podcast is to inform and educate our clients and friends on both the fundamental concepts and structure of the banking ecosystem, as well as critical developments in the law and regulation of money and banking. Thanks for joining us today. As always, if you have any questions from any of our podcast episodes, please reach out to me at jsylvia@duanemorris.com. On this episode, we're talking about banking regulation under Trump 2.0. I recently had the opportunity to attend an event at the Union League Club of New York, which is beautiful, by the way. It's called Banking Regulation Under Trump, with Comptroller of the Currency Jonathan Gould and former Comptroller of the Currency Joseph Otting. It was a good event. It was obviously began with a reception in one of the beautiful areas of the Union League Club in New York, and followed with a dinner and kind of after dinner reception for those that stuck around. During the course of the dinner, we got to hear from not only the current Comptroller of the Currency, Jonathan Gould, but also the former Comptroller of the Currency, Joseph Otting, who's now leading Flagstar Bank and their efforts into all manner of expansion in the regional banking market. It was a great event, and Union League Club did an awesome job putting it on. So a big shout out to the Union League Club of New York for doing that, for hosting, and just having a fantastic repertoire of support staff there to provide all the necessaries. So when we started listening in on the conversation, which is kind of a fireside chat type of Q&A with the former comptroller and the current comptroller, it was very clear that the goal for the current comptroller is to not get in the way of banks engaging in new and novel activities, banks engaging in activities where, in the past, it may have been frowned upon for them to be actively engaged, for example, digital assets and cryptocurrencies, and also to utilize the authorities that the current comptroller views as long-standing authorities, namely trust company activities, fiduciary activities, wherein banks have always had these kinds of permissible authorities and permissible activities. It just hadn't been the case that they applied them to things like the crypto or digital asset space prior to Trump 1.0 and Trump 2.0. As you may recall, Trump 1.0, Joseph Otting was comptroller for part of that time, and then Trump 2.0, we have Jonathan Gould, both of whom are really supportive of banks and the existing authorities that banking organizations have to conduct activities in and with the digital asset sector and with the cryptocurrency sector and so forth, as long as they're doing it in a safe and sound manner. One of the other things that was discussed was some of the recent guidance that's come out from obviously the OCC related to specifically banks and bank examinations, with examination staff being more focused on material financial risks and not so much a focus as was kind of previously the case, that there were these other soft risks that the banks needed to be paying attention to more so than anything else, or in addition to, or just as much as what they were paying attention to with material financial risks. So the comptroller made comments that made it feel like unless there are some really material financial issues for a banking organization, then there really isn't a role for the examination staff to get heavily involved in policing whether or not there are things like appropriate policies and procedures and some of the soft compliance issues that kind of percolate from time to time. So very much demonstrating a clear focus on, again, the material financial risks, things that are really detrimental to the banking system, and really trying to get away from some of the examiner reputational risk issues, soft risk issues that previous administrations had been focused more on, even more so in some cases than the financial issues that percolated out, especially in light of the 2023 financial failures of certain large-scale banking organizations. One of the other areas that the current and former comptroller discussed was around charters and chartering authorities that specifically the OCC has. There's been some scuttlebutt and discussion in the wake of approvals recently for certain trust company charters for digital asset or fintech native banking organizations. And there is some question in the press, at least, as whether or not this is appropriate, whether or not we should be issuing all these new charters. And the response that I heard basically from Comptroller Gould was that we want to be encouraging new charters. We certainly understand that there are a lot of banks out there still, but we've only had really like a handful or a couple of handful of new charters, new banking charters, whether trust company or full-scale banking operations, since the financial crisis. I think he mentioned that there was an average of something like 4 a year, and that was only because in 2020 or 2021 we had like 15. So most years it was 0, 0, 0, or 1, and that's just not where our economy should really be in terms of the comptroller's perspective on new bank chartering issues. So I expect to see more novel charters coming out, or novel banking institutions obtaining traditional charters, whether it's trust company or seeking full-scale banking charters from the OCC at the national bank level. And then, potentially more at the state level in the future. I think it probably depends a little bit on each particular state and the perspective of the state banking agencies. But with the OCC leading the charge, and it seems like the FDIC is supportive of expanding the authority of banks, or I guess not really even expanding the authority of banks, but really acknowledging that the authority of banks to engage in certain types of activities has really always been there. It just hasn't been used in the way that we're seeing now with respect to especially digital assets, fintech, and cryptocurrency. So it was, again, really well done event, really nice 45 to 60 minutes of Q&A with the current and former comptrollers. Very much more free market thinking in terms of their approach, and that certainly aligns with what we've expected from the Trump administration the first time, and then this time as well. So I think good for bankers to hear this, and not something to necessarily be frightened by in terms of expanding the number of charters out there. There's plenty of business to go around. But it also is the case that with new charters coming online and new types or styles of banking services and products being provided, that is also good for the compliance community. It's good for the banking community because it does bring online a lot of these esoteric banking products and services that may have been provided previously by either non-bank entities or largely unregulated entities or loosely regulated entities. So at least now we're bringing them into some of these activities and products and services into the fold, into the heavy bank regulatory framework that we have here in the United States, and saying, yes, we want to see expansion. We want to see an embrace of traditional authorities for new or novel products and services. But we also need it to be in a safe and sound manner. We need it to be in accordance with the applicable statutes and regulations for our banking institutions, which are highly developed and obviously creates a highly regulated industry. But that said, it was a good dinner, good event. I had my colleague Deanna Lucci join me from our New York office, and got to connect with additional clients and friends that happened to be attending. So shout out to our friends over at Flagstar Bank and Metropolitan Commercial Bank. So it was really all in all well done. Glad that I made the trek out to New York for that. And again, a shout out to the Union League Club of New York for putting on a great event. I look forward to getting back there in the future. And otherwise, for now, that's it. I just wanted to share a couple of thoughts on what I was hearing at this kind of private closed doors event, and let you all know that there's more to come. There's more interesting aspects to bank regulation on the horizon for 2026. Not withstand or not, not the least of which is bank capital rules that we're seeing proposals for now, expectations for additional chartering, and potentially more interpretive guidance on digital assets, cryptocurrency activities of national and state charter banks. So stay tuned for more of that. In the meantime, if you have any questions about this or any of the other episodes of the podcast, please reach out to me directly. You know how to get me, jsylvia@dwaynemorris.com, or you can reach out to any of your other favorite Dwayne Morris lawyers. We've got a bunch of new episodes coming online as we speak and in the near future with some friends outside the firm, as well as some of my colleagues inside the firm, talking about particularly interesting projects and practice areas that we're involved with. So if you have any questions, please let me know. Otherwise, please be sure to like and subscribe wherever you get your podcasts. And I will look forward to talking to you all next time. Thanks and have a great day.